Okay, hi, this is Simon with Trade and Perform Coaching. We're coming off a pretty solid day, one of the best days we've had actually in a couple of days, a couple of weeks maybe even. And Ron was asking me, he asked me a couple questions. First of all, why I thought 40-42 was a key area, why I reduced my trade size into that location, right? And so I wanted to go over those with him and the people in the rest of the room. So if anyone has any questions, feel free to chime in. So first of all, Ron, I knew in the morning coming in that if I got below this level, okay, I had this level, I had this, okay, but if I got below these two things, this area right here and this area right here, what I had was the low volume node right here, which, okay, so the key is to identify what's your highest odds versus your lowest odds. For me, the highest odds are always going to be the HVN. Then the next question on the HVN is, so the first question is, do we reject out of here, right? The next question is, do we reject off the value area high, the HVN itself, or do we come down to the value area low, or do we push all the way down to this last node down here? The reason I was half size double stop was, even though I felt very confident about this location, I wanted to make sure that if we decided to take the trip to 35, that I was still alive and well and had some firepower left, because I thought this whole area could be an area of response. Additionally, the average daily range has been 7 to 15 points. If we look from where we closed, which was approximately 23.59, 23.49 puts me down 10, right? Well within the 7 to 15. 23.44 puts me down 15, and then 23.40 puts me outside statistically of my average day, and I'd be looking for a response. And then on an extreme day, we might get down here. So the question always becomes, how can I manage the trade, get into the trade, grab my money, and move away? Now, I've never been a specialist in saying we're going to go X, Y, Z. The plan this morning was that if we could get above 23, I think I said 66, right? If we could get above 23.66 area, that we could launch to 23.72 to 77, I think is what I laid out in the trade plan, right? So now let's go look at those areas and translate that into what's really going on when we're looking at it in real time, right? So let's get rid of this and mark down our areas. So we know we have, this is our most key area, right? This is a 10. If I don't get above this, if I don't get above 23.59 to 23.60 in the RTH, I've got problems because I'm relatively poorly auctioned. And what stands out to me the most in this poorly auctioned area is this area right here. It just visually jumps out at me. And then this area down here visually jumps out at me. Okay? Everything else is a maybe, right? So the next thing that jumps out, so I'm going to cover this as red, code red. I think it's very important, right? This jumps out to me as code red. Very important. Holding up, only way to get above is to get above this, okay, and hold above, okay? Code blue would be this. It's there, but maybe, right? This I'm going to add to the zone. That becomes closer to a code, I don't know, what's a shade higher? Green, right? And then this right here, this is going to be, so if this is a 2, right, I'd call this a 2. This is going to be a 5. This is going to be a 10, okay? So we'll color it off so we know it's an LVN. And then this is the extreme of the day. And if we were to get down to the extreme of the day, interested. Okay? Maybe. Okay. So, right click, copy window, right click, paste window. Now we have some additional things to think about through the course of the day, right? So first, we're going to come in and look at what we did overnight. computer will operate in a reasonable fashion. This may take a minute. Again, at this point, guys, trade-wise, I'm looking for the retrace to the 50-60, stop, low of the day. Okay, size adjust, size accordingly. If you're going to take that trade, make sure you size accordingly. Okay, so when I look at this day, I'm going to format, analysis techniques. I'm going to remove, close, go to 5-minute bar, candlestick. Okay, so you'll see overnight we spent time in that HVN, right? We traded a little bit above, we traded a little bit below. This was right in the mid and it became resistance, right? So notice before we open, starting at 4 in the morning, I already have trend down, right? I have 2 points, and then right after the open we completed that third point. First problem, I knew I had to get what? Above, and then hold above this 60.59, and then from Friday, this was my HVN. I didn't mark that off earlier, but this is my HVN from Friday. I thought if we got above, and I said if we get above 66, that'll be the location where we should push to the upside, right? So additionally, so we're not even going to add NQ into the analysis even though we looked there. Now let's insert tick. I'm in the wrong category. That won't help. Insert symbol plot. Okay. So now, if you're in the room, so remember my original game plan for the day was I thought we would roll up, break IB high. I was looking for the 50-60 back for a push to 77.79. We obviously got none of that. We were already slight trend down. The next thing that happens is notice we come right into our light area, this 55 to 52 essentially, and we get a response out of it, right? We get our 2 points. If we look closely at tick, which we're going to, right? There's nothing horrible about tick there. Tick starts, here's neutral tick. That's neutral. We opened up neutral, we got underneath. Excuse me, let's go back to our actual day, sorry. There we are, we're already down. We opened neutral, we got under tick, but tick never got really ugly, right? We come into our first support, and we rotate up 2, right? Now, I would consider that whole 55 to 52 to be tested as one zone, right? Next, we've rotated down, and we come into 46.44. This is our low volume node. I know that it's normal to get a response out of a low volume node. You'll notice that we formed resistance right here. This is our supply, this is our inventory supply bar. Someone tried to reject below. And if you recall, when we were in the room, I said, hey, I drew a line right here and said, we've got to get above that. We've got to get above that. Here, we'll change the color. We've got to get above that so that we can push to the upside. That's the bare minimum requirement, right? And then I located this 42 to 40 really was my key location. I now have it a little bit smaller, right? I wanted to be in front of the HVN, but I could have targeted exactly. The problem is you'll miss it sometimes when you target it exactly. But now notice this as well. As we're coming in, and Ron, I know you saw this, big tick divergence into this location. The problem is, what's been going on the last couple of weeks? We haven't had reliable tick. We haven't had a market that operates normally. That would be a good way to put it. We haven't had a market that operates normally, right? We either haven't been getting tick divergence or it keeps bleeding against tick. It's been a little bit frustrating. So I know I'm outside of my average, right? That means I'm into my second level of deviation outside of my normal range day, right? And so I have a key location, right? And what I don't want to have happen here, because my last scale on this was out 48.50, I think was my best scale from 42. So I collected I believe 2 points here. I collected 1.5 here, I think, and I collected anywhere from 2, 4, 6, and 8.5. 2, 4, and 6.5 points out of this location, and it also on the RTH, right? So we're putting all the pieces together, brought me back, and I said at part of our trade plan we had to clear above the last swing high, which we've done, right? We all know what the trade plan is from here on the backside test, if we get a backside test, right? And we had clear tick divergence. Now, normally, if I'd been in a market where we'd been observing tick divergence working properly, I'd have pounded the daylight out of that, and I would have been willing to take the stop. But it's been a little bit of a hard market, and I don't have the cushion to back a true full-size trade in the hole, especially when we've been either rolling straight down or straight up the last couple of weeks, right? And I wanted to have the ability to make sure that I could add back into this 36, 33, 75, and therefore from 42 I had my stop at 32 because I wanted to make sure I could add back into this location. Okay, so that was my reasoning. Then the other part, which psychologically was important, I didn't want to kick my whole trade +2 when I'm outside my standard level of deviation. I wanted to have a low enough position where I could just kind of walk around the room, be patient, wait, and let the trade work in its favor. And as you see, it's extended almost 8 points out of that location, right? So does that explain the logic that I had behind the trade? Low volume node, high volume, what I actually call a super area. It's not just high volume, it's like distinct high volume area outside of the standard deviation of 7 to 15, the standard measure of 7 to 15 points, right? And I thought this was very, very, very attractive. If we can't get back below this 48 here, my guess is we will come right back to the mid and possibly just do a mirror image move back to the high of the day. What I need for that to happen is to come back to the 50-60 and reload so I can take a trade back up. But tick is not at all what you would look at and say that's trend day down type of tick behavior. Okay, so I'll open the room up to questions. Nice job, Brian. 42 to 48. Great, great trade. Tip of the hat to you, man. That's the third day in a row you've gotten paid. Does anyone have any questions? Room's open. Here, I'll even open the mic. I'm going to open the mic so people can just ask me, and then I'll repeat the question. I think I have unmiked everyone. If you'll open the mic on your end, you can ask a question. And I have my headset on. Anyone have any questions? This is the time. Because we don't do it much better than that. Ron, did I answer your question? Nothing. I'll take the stop. Ron asked me what would stop me from taking the 50-60 back now. Nothing. I'll take the stop as long as it holds the low of the day. We're not in a bear market. I can hear you, Brian. I'm looking at each day and seeing kind of what it's been, but I know there's several sources that list off what the average range has been over the running, I think it's the last 3 weeks, and it's been 7 to 15 points. Yeah, that's the answer. So I just look it up, whatever it is. There's people that post it all over the place. I don't keep up with it myself. But I know once I get outside of it, I have a very good chance of a snap. Going back to Ron's question on the 50-60 back, I would have preferred it that we were... So the question is, are we in an overall uptrend, right, Ron? And if we pull up our chart, let's see where we have our drawing tools hidden here. Let's just go to our next reasonable time frame. Okay, so here was my last swing low, right? As I measure it. The reason why I measure that is that's where we got the largest launch, right? And we have held the 50-60 back. From that, we tested a little bit behind. Actually, we're right on it, aren't we? And then we have this next area right here, right? I kind of try to stack them. And we're kind of right in that juicy area where we've had 50-60 back. And I'd have to see a pretty negative close. The other thing I'll say is this, it's 12:30, right? And my goal is to be finished up by noon if I can. I will not take the 50-60 back after 1:30, even if it works. Like, if you think about it today, we've had 3 trades, right? Each trade's been worth 1.5 to 8 points, right? Depending on how you managed it. We successfully managed where the highest odds and where the lowest odds were, right? We successfully identified coming into the morning that we were already starting to trend down, right? That was pretty easy. And we also identified that we broke, right, which was important. We broke London low and we broke prior sessions, both RTH and 24-hour low, right? And I would expect this now, this 55 area, naturally, we have some, what I refer to as negative space. We have that negative space now. And it looks kind of like this, right? See how we came in on this day and we were trending down, right? This is what had to be held. This area had to be held through here, right? And so if you look, here we'll draw it all the way across. If you look, we came up, pushed in, rejected down, right? And then once we trapped above, this became our trap point, right? Everyone who was trying to short against this, whoosh, right through that. Of course, that was a Fed day, so a little bit tougher to gauge that, but you knew if you got above, right? And you could say the same thing when we were back over here, right, coming into the day. It's just looking for little clues and putting it all together. When we were up here and we broke down, right, the first thing we should have noticed coming into the day was that we were trend day down. And what I want when we break a trend day is I want negative space, which is one thing we didn't have here, right? And now we know we got to get back, we got to at least hold, that's like our last line of defense, right? What does that look like in reverse? Okay, so what that looks like in reverse, see when we break these lows here. So see when we came in and we start trending down, right? We get below the low. Notice there's no negative space. So as soon as we close really back into this structure right here, if you go take a close look at that structure, right? This trapped all those shorts and we whooshed back to the other end because all these people got short, right? If you look, it was down, 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 down. We finally broke. They whooshed. Now look where we come back and backside test to, right? That was all the trap point, right? And so we broke the, here's the uptrend. We break it. We start to go down. We get negative space. Guess where our next resistance level is going to be right here, right? And notice we busted right through it, but then we backside tested it. And where do we go? Right to the top of the next end of the structure. We break that structure and backside test it. I mentioned that last night. If we get above that 66.70, I'm looking for the backside test of that area to whoosh us to 77.78. Okay, so anyways, it didn't happen. None of that occurred. I am looking for now for the 50-60 back, and spent 20 minutes on it. I thought that was pretty good. Any other questions? Floor's open. Anyone have any questions? Now's the time. I don't do free coaching very often. Not like this, at least. Did I answer your question, Ron? Did it help? Okay, cool, guys. Then let's call that a print. I'm going to lunch. I'm tired. That was a good morning. That's good money made. Point, remember, this is all for educational purposes. None of this should be considered a trading recommendation. You can lose your ass trading futures. Make sure you know what you're doing and that you can bear the risk. Okay, talk to you later.